Welcome to the Real Estate 401k Show. Here are your hosts, Ryan Gertis, Mike Weinstein, and Justin Frederick, helping you build a legacy of wealth through real estate. Powered by the Recon Group at West USA and the Frederick team with Fairway Mortgage. NMLS number 625918.
Okay, so we threatened and we promised weeks ago, and so we're going to talk about VA loan assumptions because I think it's a potentially huge opportunity for not only home buyers but especially for investors. But Justin, I don't like to ever make any assumptions, so it may seem incredibly obvious, but what is a VA loan? And give us a little bit of the ins and the outs of a VA loan.
So a VA loan is for an individual who served the military for a certain period of time and was honorably discharged. They have an entitlement that the VA is paying for to insure their loan. And it's an incredible loan because you can do 100% financing, no mortgage insurance. Typically, the interest rate is much lower than what you would find with a conventional or FHA loan. And typically, as lenders, we reduce the cost of their fees as well because we're trying to take care of our veterans. We appreciate your service. Thank you very much. So that's a VA loan in a nutshell. What else am I missing?
Well, I don't know. I'm not a lender.
Okay.
Well, I think the biggest part that you're missing is what we want to talk about is that they're assumable.
Yeah, they are assumable. Now,
so let's talk about what that means, and I'll let Ryan jump in because before we talk about necessarily what it means to assume and going through the process of assuming a VA loan, I think people need to understand that it offers an incredible opportunity because there are a lot of VA loans out there that are in the threes.
In the twos. There's some in the ones. There is some in the ones.
So if you're not caught up on mortgage terms, assuming means you're absorbing or you're taking over, for lack of better words, if you're not familiar with that term. And so to assume it, you're literally taking over their exact loan that they had before. Now there is a process, and that's where you jump in to explain what the process is and whether or not it's something that a person could assume, because just because it's assumable doesn't mean that you can just waltz right in there and take it over.
That's right.
And a great potential opportunity, obviously, for a home buyer whom, if they went the conventional route, they might be looking at a 7.5% interest rate, depends on when this podcast airs. But I think it's more of an opportunity for an investor to be able to pick up investment properties. And instead of having that 7% interest rate or 7.5% interest rate, you're now in the threes or twos.
I'm going to interrupt you there.
Okay.
It has to be a primary home because a VA loan is only for primary residents. Now, when it comes to a VA loan, when you assume a VA loan, you have to qualify on the same basis that the veteran qualified on. So it has to be a primary home. That's number one.
But with Reconomics, if they were to go and live in it for 2 years.
There you go. That's the way around it. You go live in. You can live in it for 1 year. You can live in it for 12 months. But you have to qualify with the same income qualifications that the original borrower qualified for. Credit score qualifications are going to be the same. The nice thing about VA loans, though, is they don't really look at debt to income ratio. They look at what's called a residual income. So whatever your leftover income is, and there's a qualifying basis based on the family size and where you're located. So it doesn't have to be you don't have to be at a 45% debt to income ratio. I've seen people qualify for VA loans at basically 70% debt to income ratio. But the residual income is what you rely on that. Now, one of the biggest factors, well, not even factors, like miss.
I was just, you look confused, so I was just throwing out
I can't come up with
words.
a word. So a lot of people think that they don't have to pay closing costs on assumption, and you're going to have to pay closing costs. The closing costs are typically from $3,000 to $5,000 depending on the servicer of the note. Also, you're going to pay a VA funding fee. You can't add money to the note that you're taking over. So let's say the borrower, the current homeowner that's selling the house with the VA loan, has a loan for $325,000. Well, if the home's listed for $500,000, you're going to have to come up with a difference.
Right. Yeah, because the seller is going to want to get his equity.
Correct.
Can I ask a question back up just a little bit?
Yeah.
So when it comes to residual income, where does the certificate of eligibility come into play on that?
So with a
good
VA assumption, a certificate of eligibility.
I'm talking about so if I'm going to get a brand new VA loan, I need to come up with a DD-214 and a certificate of eligibility, right?
We order the certificate of eligibility from the VA directly.
Based off of your guys' residual income?
No,
findings?
We order the certificate of eligibility based on the Social Security number, date of birth, and the name of the borrower. So that's an underwriting thing with residual income. Now, it's a guideline based on, again, location and the size of the family.
Okay, so let me ask you this, because I know we have a lot of veterans that listen to the show. We have a lot of active military that listens to the show, and to Justin's point, thank you for your service. So if I've got my VA eligibility locked up into the home that I'm selling you, you're now assuming my loan.
And I'm taking your eligibility.
Okay, so I don't now get to take my eligibility and go elsewhere with it?
Correct. Now, just because you've lost some of your eligibility doesn't mean that you can't buy another home with a VA loan. It just means that you're going to have to put a down payment down. Now, hopefully your home's appreciated to where you're making money so you can use that money to put down on another home. But here's the negative about letting somebody assume your VA loan. If that home goes into short sale or foreclosure, that affects your eligibility as the veteran. Now, here's the pros, though. Me, as somebody that's into finances, I'm going to pay thousands of dollars to get your 2% interest rate because I know what that's worth. I'm going to pay thousands of dollars to get that because I know that's not coming around again. I know it's not coming around again. And you could walk. Who knows what somebody's willing to pay for that, depending on what you owe on the home, depending on what the home's worth, depending on what you could eventually make in rent on that property. That's something to consider as a buyer.
So here's the strategy, and let me know and poke holes in it.
Yeah,
I have a VA loan for $300,000. I'm selling my home to Mike for $500,000. He only has $100,000 in his pocket. Can I have him assume my $300,000, and then I have and then I write a second note that's in second position, and I carry the other $100,000 over to Mike, and then he drops his $100,000. Here's the benefit of that. Not only am I making interest on the second, but it's also allowing me to police and monitor what he's doing on the first. So if he ever does go into default,
I'm notified.
I foreclose on him first because he's probably not paying my $100,000, right? Because he's going to want to pay the first before he pays the second. Am I tracking here?
You're tracking. You're definitely tracking. So I don't know the laws on the second, and if you can foreclose on somebody with the second. I'm sure you can, but I don't want to say that on the podcast, because that's not my profession. That would be Arizona laws, and that's state specific on that. But yes, you could do a seller carryback for a portion of that at a market rate, and market rates vary on second mortgages
I think
all
I
over
could
the
talk
place.
all day long on this. So let me ask you another question to piggyback on what Ryan's asking. Could we set this up through an account servicing company so that you who are assuming my loan have to pay the account servicing company the mortgage payment? The account servicing company then pays that mortgage payment because I know that if the account servicing company starts missing payments, I'm going to get notified. So, or am I just throwing you on the spot there?
You're throwing me on the spot, but I don't see why you couldn't do that because you would be in control, being an owner of the property still by you holding ownership on the deed with a lien. I don't see why you couldn't do something like that.
All right, so Ryan, you poke holes in this. I would say this would be another added benefit to a veteran or an active military that has a VA loan on a house. If the house is worth, let's say, $500,000, like that's what I could sell it today, would a buyer potentially, to assume a 2% interest rate, maybe pay $525 for that house above market value just to be able to assume the loan? Because at the end of the day, the amount of money that you're saving in your mortgage payment is going to well pay for the added price to the home.
Sure. I think the quick answer to that is you can charge anything that you want, right? But at the end of the day, they're going to have to go over there and appraise it. So the appraisal's only going to dictate what the VA amount is. So just so long as it's over that $300,000,
or I've got enough cash to make up the difference.
Right, you're going to have to come up with the cash to make up the difference. So if the appraisal comes in at $500, the VA is at $300, they're going to underwrite that assumption all day long. Am I
correct?
Okay?
Yeah.
So then you're going to have to come up with that other $225 if I'm a seller, you're a buyer.
Right.
Here's my next question. Let's throw another layer.
Now,
on
keep
this.
in mind you have LTV requirements with the VA as well, so you can't borrow more than 100% of
right. But we're talking about added.
Value,
we're coming in with added.
Yeah,
added
I'm
cash.
just throwing that in there.
Yeah,
All right, last question. Go ahead.
Will it allow for wraps? I have a 2% interest rate on my VA. I want to assume it over to Mike at 4% because that's still a hell of a lot better than what he's going to get over on the open market.
You're getting that's above my pay grade, to be honest with you.
All
And
right.
I just I don't see that happening.
Okay.
But I could be wrong.
Okay.
For sure.
All right.
All right. Well, hey, if you're someone that possesses a VA loan, if you're active military or a veteran, and you have questions about it, or you're a potential home buyer who knows somebody that's got a VA loan and you're interested in learning more about assuming that VA loan, we want you to text VA to 623-AZ-RECON. Again, just text VA to 623-AZ-RECON.
Thank you for joining us on the Real Estate 401k Show. If you want more information on how to build wealth, click on the link or text us at 623-297-3266. That's 623-AZ-RECON.